right, guys, listen up. It looks like the Trump administration reportedly is looking to axe the tax EV credits, which award buyers of EVs up to $7,500 in tax credits. This is a federal program. So the Trump administration reportedly is looking to axe that. We have to get into it. What does this mean for Tesla? Because in the after hours, Tesla tanked. It looks like it's now recovering, but I have some news for you why this actually might be bullish in the long term, but bearish for revenues in the short term, but not as bad as the reports are making it out to be. And there might even be a trade to leverage off of this because I believe there was an overreaction after that reporting came out. And yes, right now I'm back in beautiful New York City, but that's not important. Let's get right into it.
All right, so here we go. It says Trump expected to try to eliminate electrical vehicle tax credit. The Trump administration is reportedly expected to pursue the demolition of electrical vehicle tax credits that provide discounts of up to $7,500 on new EVs. Now, as you can see, Tesla dropped in the after hours, making its total one-day drop, including the after hours, a little over 7.5%. Now, the reason that Tesla took a hit initially is because there's this perception that Tesla makes a ton of its money from the ZEV credits. So every automaker in the United States is required to keep a certain amount of ZEV credits by the federal government. And if they don't have enough of these ZEV credits, then they actually get penalized. Now, because Tesla is 100% EV and produces more EVs in the United States than anybody else by a wide margin, they have a ton of these ZEV credits. So they just keep whatever's necessary on the books and they sell the rest to other automakers. And that way, the other automakers that are not producing as many EVs, they get to not be penalized because they hold the ZEV credits that Tesla sells them. So before we get into potential trades, let's actually take a look at how much of Tesla's revenue these regulatory credits make up. And the results might shock you because, again, there's this perception maybe by the anti-Tesla media that Tesla makes most of its money from regulatory credits. But if you take a look here, we're taking a look at very recent numbers, Q3 23, Q4, Q1 24, Q2, and Q3. You can see here the regulatory credits, and shout out to this Twitter account, this random Twitter account, Zero Shorts. They took a screenshot of this and highlighted it so that it's easy to read. But if you take a look at this, 554 million in regulatory credits compared to a revenue of 23 billion, 433 million compared to a revenue of 25 billion, 442 million compared to revenue of 21 billion, 890 million compared to revenue of 25 billion, so on and so forth. But you see here that we're talking about in the low single digit percentage ranges, like 2% of Tesla's revenue came from regulatory credits. So is this going to lower Tesla's revenue? Yes, of course, by a small margin. Also, it's important to note that Tesla's regulatory credit revenue was down 17% quarter over quarter after the last quarter, and they still beat earnings. And the reason that you're hearing some counter trend news that this is actually good for Tesla is because it is. So if you think about it in the competitive landscape and what industry that they're in, who's competing with them on margins? Nobody. Who's competing with them on revenue of EVs? Nobody, not in the United States. Who's competing with them on EVs sold? Nobody, right? That's why they have so many ZEV credits. So if you take a look at it on a competitive landscape, right, the first reason that I think is bullish in the long term is because every other car company that's trying to produce EVs, which has now become a federal mandate and in some states a state mandate, is losing money on EVs. Nobody, not Ford, not GM, none of these companies, none of these American car companies are able to produce EVs profitably. So in a landscape where all of the ZEV credits are going to be removed for everybody, who is left to still be able to keep their head above water and not only that, generate positive margins, positive earnings, etc.? Who's able to do that? If every car company right now is losing money on EVs with these tax credits, imagine if these tax credits go away. That is why you're hearing some people in the market, including myself, with the opinion that this is actually bullish in the long term for Tesla, not because the revenues are going to go up as a result of these EV credits going away, but because it makes it even more asymmetrical for Tesla's competitive landscape. Now, the second reason that I think that this is an overreaction is because I do not think that the Trump administration is just going to stab in the back a bunch of American companies, right? Not, Tesla for sure because of their relationship with Elon, but also, Ford, GM, these legacy American companies. I don't think that Trump is going to wave a broad stroke brush and completely put these companies underwater, right? I don't think that's going to happen. Now, you could maybe say that he's doing this because in order to prop up the oil and gas industry, which he is a big fan of, right? You could say that he's doing them a favor, maybe, but we still have big American companies like Ford and GM that would completely be demolished if these EV credits go away. They still have not yet figured out how to generate a profit from their EV sectors. And also, all of this is just speculation. Trump is not even president yet. He's the president-elect. We all know that it's part of his shtick to talk a tough game like he does with China tariffs, for instance, like he does with this. But it's been shown in the past, at least because we've had one term of Trump already, that when American CEOs such as Tim Cook come to him and say, hey, these China tariffs are going to make iPhones cost $5,000 in the United States. So you have to work with us to give us an exemption. So what was done at that point was tariffs were put on some products, not a broad stroke tariffs on all Chinese products, including Nikes, including iPhones, etc. And I think something similar is going to happen here, especially with Elon's influence, right? I don't think that there's going to be just a broad stroke waving off of the EV credits. But if there is, the only American car company that's left to benefit competitively is Tesla. Now, for those of you who've been tracking my Tesla analysis forever, but for sure since it was in the 150s, at least in this last bull cycle, we have this level at around 299. It's basically the previous high from July 2023. This is at the anchored VWAP right here. We are also in a daily fair value gap, right? I would not be surprised to see a bounce from here. But obviously, this level was only tested one time recently in the last couple of years. The level that is way more significant, where I think an aggressive approach can be taken, a more aggressive trade approach can be taken, is around this 270 level, because this level was tested 3-4 times. You have one here, almost here. You have one here, and you have one here, right? So this level was tested 4 or 5 times already. So that 270 level is definitely a huge level. And if we pull the volume profile and we take it back to the January lows, you could see that the volume shelf starts developing around that 270 level, right? This is almost 2 years of price action that we get this huge volume shelf in the 260s, 270s, right? This is the point of control, very close to where that former resistance, now potentially support is. Now, at this 300 level, I would not buy naked calls. One, naked calls are still really expensive. And two, there is a very, very, very big chance that we retrace further back down to this major level here. The only few things that I would do here, if you are going to trade, is trade maybe a vertical spread, something that is much less threatening. So if, for instance, you take the 345, 350 spread, and this is just an idea here, but the 345, 350 call spread, if you look at this, this will only cost you $133. And if you're right and Tesla is above 350 by December 20th, as of the time of this recording, you have over a month for this, then you're going to be making, what is it? You're going to be making around 370, right? 367. For $133 risk, you'll be making 367 max profit. Now, if we get down to this 270 level, then what I will consider doing, and I've talked about this before, is I will consider potentially buying leaps. So going 5-6 months out, maybe May or June 2025, and buying a in the money call, which is basically a leap, right? Around the 80 delta, maybe buying the 240 call or 245 call, whichever has the most volume. It looks like here the 240 call would, right? And that's going to cost quite a bit of money, right? 10,200. That mimics buying 100 shares of Tesla. But then what you could do after buying that call is sell cover calls against your shares at a higher strike price. So if I bought the 240 call for 102.7 or 10,270, right? Then I would go ahead and start selling shorter dated calls above this in order to lower my cost. So I might then go out to December. Why did I go out to December 6th? I might go out to December 20th, for instance, and sell the 350 call for $1,200, right? And I would continue just doing this. And if these cover calls expire worthless, and I would sell another one the next month and another one the next month, thereby lowering the price of this leap here. And if we're looking at a long-term investment, I do think that this price point is terrible, and you're much better off waiting for the 270 level. If you're looking for a swing trade, you could certainly buy the shares here and institute, a tight stop limit just in case we get down to that 270 level, right? Where you buy the shares and you would sell it at the nearest high if you're looking for a swing trade. But other than that, if you want to trade live with me every single morning, if you want to get access to all of my ideas, swing trades, day trades, long-term investments, etc., make sure you click the link in the description and join below. I'm also doing a free trading mastermind on August 24th. First 1,000 people get in. After that, it's capped, so make sure that you sign up if you want to get in. And you can see here that so far, our November is going swimmingly. Had a perfect week this week, all green days. Definitely took a couple of hits last week, but overall green for the month of November, and looking forward to continue this. But other than that, let me know your thoughts below. Do you think this is bearish for Tesla? Do you think this is bullish? Do you agree, disagree? Would love to know your thoughts. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.